Good morning and welcome to the ADS Securities Markets Update. Beginning with the Asian session, as always, we had a collection of economic releases from New Zealand and Japan, which had a notable impact on the markets. This is also a part of the effect from the massive declines in the energy prices yesterday. Beginning with New Zealand, the building permits came in with a positive surprise, rising by 8.8% in October, comparing to a decline of 11.9% in September. And this is the biggest monthly increase since January of this year. Moreover, the ANZ Business Confidence Index increased for the second month in a row, rising toward 31.5 in November, up from 26.5 in September, and this is the highest increase since June of this year. In Japan, there were many economic figures today. Most of these figures also came in with positive outcomes. However, the Japanese yen kept on weakening across the board. First of all, the Japanese household spending was among the worst figures in October, rising or declining, by 4%, which is the seventh monthly decline in a row so far, while the estimates were to decline by 4.8%. Another good news came in from the jobs report, as the unemployment rate ticked lower toward 3.5% in October, down from 3.6%, while the estimates were to remain stable at 3.6% as well. Tokyo and the national core CPI eased back toward 2.4 and 2.9 respectively, as widely expected. The industrial production showed a positive surprise again, rising for the second month in a row by 0.2%, comparing to a rise of 2.9%, while it had been anticipated to decline by 0.4%. Finally, the retail sales came in in line with expectation, rising by 1.4% in October, comparing to a rise of 2.3% in September, and this is the fourth monthly increase in a row. As for the European session ahead, we will be focusing on a collection of economic releases from Germany, France and the Eurozone, which is likely to have the biggest impact on the markets today. Beginning with Germany, the retail sales is expected to rise by 1.7% in October, or after a sharp decline by the most since 2007 by 3.2% in September. In France, the consumer spending is expected to rise slightly by 0.2% in October, comparing to a decline of 0.8% in September. The most important economic release today is basically from the Eurozone. We will be waiting for the CPI Flash Estimates, and the estimates are to decline slightly back toward 0.3% in November, down from 0.4% in October, while the core CPI Flash Estimate is expected to remain stable at 0.7%. However, declining energy prices during the month of November and the month of October may lead to another decline toward 0.2%. Going forward to the US session today, no economic figures will be released from the US, while we will be waiting only for the Canadian monthly GDP today. The estimates are to grow by 0.4% in September, after shrinking by 0.1% in August. These are the most important figures that we will keep an eye on today. However, looking at the latest development in the crude oil, basically OPEC yesterday decided to keep the oil production target unchanged, and the markets were hoping for a cut by 1 million barrels. However, the decision led to a massive decline in both WTI or West Texas crude oil and Brent crude, and we've seen a decline with more than 6%. The West Texas crude oil also continue to decline, passing our target mentioned in our yesterday's report at $70, reaching as low as 90 a barrel. In the meantime, the next potential target stands at 66, which could be seen in the next few weeks. Finally, looking quick at our weekly potential trades that we mentioned in the previous reports, or since the beginning of the week, the cable or sterling dollar, Kiwi dollar and the euro are already in profit. The cable trade is up by 160 pips so far. Kiwi shorts also has 67 pips so far or in profit, and finally the euro is almost 80 pips in profit so far. In the meantime, we recommend closing these trades ahead of the weekend, and most importantly ahead of the Swiss referendum on Sunday. This is it for today, and this is it for the week. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching and have a good weekend.